The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this last day of April, ending the candle of the monthly chart. We're going to see what happens here. It's a fascinating market as always. And for a little while now, it's been a very, very mixed market. I was speaking to someone just a little while ago, and we were discussing what's working, what's not. But basically what is not working is that the high-techs, which were the absolute leaders before, are now rotating through different sectors within their own groups. So we'll go through this. Here we go. The Dow is up 45 at 24,359. 24,359. It was at 24,498 just early this morning. Huge move to the upside. And given a chunk of it back, in fact, McDonald's is helping it to the upside right now. My contention for subscribers to my opening call is, has been over the weekend and into today was that I see upside potential more for the Dow, but it's going to be a real struggle. I also don't see anything literally breaking down as of this moment. I can see it maybe a little later in the week. So the first few days of the week, I think, are just kind of some fun buying, some rotation in the funds, because with the end of the month, getting rid of certain stocks and certain categories, beginning of the month, doing some buying. So we could see range-bound trading. That's really the issue. And the pattern that I've been describing for months now is this lowercase h that goes to a lowercase m. Dow made its high in January, the last week of January at 26, on the 26th of January at 26,616. Peak D in the Chapman wave, and we've been in a trading range ever since, but we did make a lower low in the Dow at 22,360, the low of February the 9th, with an arch formation that went to the low of 23,344. And that was right at the end of March. The other indices didn't do that in their H patterns in the weekly chart. Now, this is going to be really interesting. So within the context of the different markets, you've got the Dow daily still in the sell mode, the Dow weekly still in the sell mode, monthly chart with the close today of the bar, of the monthly bar, monthly candle, so far holding nicely above 23,889, the 9-period exponential moving average. MACD is pulling back a little bit, but still positive. Stochastics just dipped under 80% at 78%, something to watch. Here we go. SPX, the S&P right now is down 7 at 2662. Also struggling with that declining trend line that we were looking at in the lowercase h pattern that goes to a lowercase m in the daily chart. Same thing in the weekly chart. Monthly chart also nicely above the 2623 9-period moving average, since it's at 2663. Parameters to watch for the Dow, it really needs a break into 24,580s, and for the S&P it would be 26,000. The high today was 2682.90s. So you need to see, I would put it at 2693, getting close to the 700 level, 7,000 level. Sorry. Why am I saying that? 2,700. I've been looking at numbers all day. They're just floating around. Here we go. The QQQs down 1.11 at 160.97. Negative action Friday, followed with negative action today, now down 0.69%. The MACD is not good in the daily. Stochastics way down at 42%. And that arch formation, that second arch formation that's forming in the weekly chart says, hey, the QQQs better handle the 159s, because a close under 159 would be really poor action. And the resistance is up at the 163s, 164 area. Let's go to the IWM. The IWM at this particular point is down only 0.24%, whereas the S&P is down Oh, what's the 0.24%? Okay, they're both down 0.25%. And at 154.27, really struggling. And what I said to those people that said the Russell 2000 is acting way better than the other indices is, yes, that doesn't make it strong. It's just acting way better. That's number one. And number two is, within the context of the markets, it just says that it is so close to breaking out and hasn't been able to find the strength, but it also hasn't broken down. I'm drawing a wedge formation. Parameters to watch are a close above 157.50 would be very positive. A close below 153.30 would be very negative. Would be negative. I wouldn't say very negative, but it would be negative. It would be more negative than positive. So let's go to the, okay, I want to look at gold now. Oh, no, I want you to show this. The ESM 18, that's the ES, the mini, the March mini, S&P. Look at this. It's within a context of, how can I put this visually? If you think of a number of bars going up, and you go from the low of that bar to the high of the bar, think of it like a swing trade, and then a pull back to the 200-period moving average of 2619 in a swing trade from the 2718s. It's come back and it's hit resistance. But what's more important is, look, you've made a peak E, very sharp pullback in the 120-minute chart. And for subscribers, I was saying that this area here of the 260, between 266 and 2680 and 2682s, there's going to be a lot of resistance. And here we are pulling back. We're at 2660, and we've gone below the 200-period exponential moving average. So this is not good for the E-mini. Now the Dow's only up 4, S&P's down almost 8.5. Now let's go to gold. How is gold reacting? What was the trigger to have the market move quite nicely intraday to be pulling back? Gold is down 7 at 1316. I've been talking about this 200-period moving average supporting the daily. The more times you hit it, the greater chances are that you're going to go under it. Well, it went under it. Now it's sitting right on it at 1315, down 7. The weekly chart, same sort of thing. You don't want to be breaking down. You don't want to be breaking to the 1305s or lower in gold, because if you do that, you've really lost the impetus for the upside to break out, to make that leg to the upside that we were talking about in the monthly chart, that leg D. So this is not good action. And what's really impressive here is that the dollar, which we still remain long, whoa, look at that. I thought the dollar would have a pullback. Well, it did pull back intraday Friday, still had a good candle. And today it's filling that candle. The high was 91.99, the dollar index on Friday. And today's high is 91.92. It's at the high right now. And it's a very strong candle for a beginning of a week in a leg C in the weekly chart. And this leg A is what's really been impressing me in the dollar, in the currency. This is nice action because currencies move in a direction for a long time. And that includes the sideways action. Look, even now it hasn't broken out. If you think of that candle of the 12th of January, the second week of January of 2018, with a high of 92.64, and you go down to the low that was made at in the 88s, 88.25, we're just filling in, but it is making a beautiful cup formation, and the technicals are starting to improve. If the dollar goes to 93.20, 92.40, that 200-period moving average in the weekly at 92.83 will beckon. Huh, very interesting. Well, I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Dow's now down 10. S&P's down 10. News related, and I believe it might be something in the Den was posted that that Netanyahu is set to make a significant televised announcement on Iran on Monday evening at 8 p.m. local time, that's 5 p.m. GMT, in what his office said would be dramatic news about Iran and significant development regarding the Iran nuclear agreement, and which will reportedly influence the world's 12:30 p.m. hold. Okay, so whatever it is, it's impacting the market. Let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm well, thank you.
Great. So I never timed the market perfect, but fortunately I was able to reallocate a good chunk of my 401k and offload it in some conservative areas before the drop in February. Right. And so now I'm trying to get in this, at least for that, right? The 401k, the IRA stuff. I'm trying to get a state of mind where you just forget about trying to time the market and maybe poke around where you think you could be with kind of near the bottom, but maybe not at the very bottom. And as we're here, I kind of feel like the market, for one reason or another, could either go up 1,000 or down 1,000. And when I get into that area, and then I mix that in with the fact that in your trader's corner this morning, I think you went long a position, right, a full position.
Yes.
Is this one of those areas where maybe it is time to start throwing some in, a chunk in, maybe a third into the 401k again?
So let me just talk about that, because as I'm looking at it, and as I did more work, I didn't have all that much time over the weekend to actually post charts, but I did quite a bit of looking at the charts. And what my conclusion was is that my assessment from a couple of weeks ago has to still stand, and that is that the Qs have made I can only call it a significant short to intermediate, not a major, but a short to intermediate term top from everything that I'm looking at. The only way that would change that is the Index 100, the QQQ series, the power shares, and that takes in the Index 100 top stocks. It says to me that it confirms for me, especially with the semiconductor index acting so poorly, especially after Thursday's tremendous move after the market closed, with the anticipation that Friday would just be a blowout session. In fact, it was the exact opposite. I'm of the opinion now that we have to make some kind of a low, and it's going to, we needed to get through the previous week, not last week, the week before that, which I had said was significant for three reasons. One is regarding interest rates starting to break out, not breaking out in monthly charts, but in the daily and the weekly charts. They really were starting to move very strongly. We haven't seen a move like that with the implications like that for a long time, even though in some cases like the 30-year, we've been there before. But that 5-year rate of increase in the 10-year, that was significant. Number two is the dollar and other currencies, the strength of the dollar continuing into last week, with the yields continuing into last week until Friday, Thursday, Friday, where yields pull back some. But the dollar managed to hold very nicely, and today the dollar is acting well. Together with the third aspect, and that is that the semiconductors had led us up and down for the last at least 1.5 to 2 years, and now they're starting to fail. And it says to me that the cycle in the industry, at least now, I have a good friend who's in the industry and we talk about it, but I cannot rely on what he says because he looks at it as an insider. And I've noticed over the years that it's not the accuracy with which he tries to make his predictions is based on other factors, and very often it doesn't correlate exactly to the semiconductor index because there's so many different sectors. But the semis are acting very weak, and it seems to me there's a good chance that their cycle, at least for now, looks like it's running out of energy. So with that in mind, it's the rotation into other areas. The retail sector in certain sectors within the sector, that is certain stocks within the sector, are acting very nicely. Look at Macy's. So I think you're absolutely correct. You timed it very well. I think that we need to be looking at how significant is the very sharp rally. Say in a Macy's going from 17% just 6 or so months ago, 17.41 up to 31.55 right now. That's a huge percentage. But how significant is it when the stock was 173.61? It's going. The 2 weeks previous were telling me about a whole bunch of things that I was looking at, as well as Dave White's oscillator index, which has really been proving a tremendous boon, giving us a lot of knowledge about certain things. And it's saying to me that we've got to be very careful. And you said 1,000 points. I'm not so sure. And now, so I can go to the nitty-gritties of what your question is. I think for now we're stuck in a range. Maybe Wednesday the Fed does something and you can start to see a bigger move. But I would not be surprised if that we're stuck in a range of maybe 24,300 on the down right now, maybe 300, maybe 400 on the upside, and maybe it's only 300 or 400 on the downside. It is what happens if the weekly chart for 2 weeks in a row breaks above those conditions. So I'll just make it very easy. In the S&P, it'll be, what if the S&P is able to close above 27.15? What was the high on that little doji candle there? 27.17. So if the S&P is able to close above 27.20 for 2 weeks in a row, in the entire month, we give it the whole month of May. If it's able to do that, I'm going to be very impressed and say that the downside is now pretty limited and the rotations must be taking effect because we're going to see which sectors are coming alive again. Will it be retail? I'm not so sure. Has the XLE, the energy sector, run its course to the upside? So I think this particular week, going into the Friday close, a week from Friday, that's next week, the entire next week of what would be the date? The week of the 9th
so
or 10th?
Are you saying that when you say it timed it well, you mean that this is a good time to maybe dip in back into the 401k?
No, I mean I think you timed your exit very well. Now, in terms of looking at markets, You see, I don't want one stock like maybe it's McDonald's. I could do it now. I don't want to take the time. But I think McDonald's, let me just see, MCD, I think it had a big move this morning. Yeah, look at that. Big gap up 8 points at 166. That alone could really help the Dow, which it's doing. So what I want to do is I'm going to say to you, have patience. I still think it's going to be a sudden move, a breakout move of the VIX index. And the VIX right now is at 1607. It's up just a little bit, up 66 cents. It's going to be a move in the VIX index that takes you to the 27 to 31 area. And we just have patience for when that's going to happen. That's going to be the next. Can you hold on?
I can. Thank you.
Okay. We'll come back and I'll finish that sentence as soon as we return. Dow's up 13 as these are named Basil Chapman, Tiger Technician Dow. We're on with Ben and Tallahassee. We're talking about the markets. When the next good ends.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. Dow's now up 27. S&P. All right, well, fear is over. We're back to normal. Dow's up 28. S&P's down 75. So then this is what I'm looking at. When I say, now, I don't know if you might have listened, but about, I think it's possibly now 3 weeks ago, I had a caller and wanted to know, in the long term, what would I be thinking about, say, the Dow, and would it be an opportunity to pull back? Would it be an opportunity to position himself long, looking out? And what I said is, because he's a very long-term investor, he could start a very small position in the Dow. I wouldn't be surprised if the Dow is somewhere around where we are right now. And I said, don't expect very much, but it's a starter position. And this way, because I'm anticipating, even with a big pullback, that we will be making new all-time highs, that this is just a long-term position, that's fine. But in your particular instance, because now you're in cash, you shouldn't feel an urgency to pile in to do anything. What I'm going to suggest to you is, let's just give this another week or two. Let's just see how, look, the PPH, which is the Van Eck Vector Pharmaceutical ETF, just kind of stubbornly down at the bottom, made an A formation in the weekly chart, trading 57.15. Nothing much to see here, but it has held very well. And the monthly chart has had a steady move to the upside. The last move was a little bit deep, but I'm saying to myself, if fund managers start to rotate to different sectors, would they go, if whatever the tax advantage, whatever it is there going to be will there be a slant bias to the upside in something like the pharmaceuticals? The biotechs have had for ages they've been correcting. Will they find favor? Well, I'm prepared to give them time, because all of them have to hold key support levels. In the case of the IBB, it's really the 100 key support. It's at 104.03. So I think you've got time. What if we're wrong? What if all of a sudden in 2 weeks' time we're looking at the market and the IBB is at 110, up 6 points from here? The IYT, which is the transportation index, instead of being towards the lows of all this, or the middle of this trading band, has broken out from the 190 level up into the 196. Well, that's going to be a very positive thing. And then you can say, all right, I've missed some percentage, but I'm looking at higher highs and higher lows. The trend appears at that particular point to say it's favoring the upside. And it's exactly the same on the downside. What if in the range, we're stuck in the range, and it starts to break down? Well, we know the levels to look at, the recent bases or the 200-period moving average support. I think you've got time. There's no need to rush into anything.
The two things, Basil, that kind of were my flags to potentially get back in. One is when you pulled the trigger this morning, I wasn't quite sure if that was a short-term trade type philosophy or longer-term. And then number two, if you look at the weekly and the DIA, it looks like its higher lows over the last couple of weeks, and it looks like there's two, potential points of a what do you call it? A trend.
Yeah, like pivot points, major high and low. Yes.
Yeah, to create a horizontal line of whatever, right?
In the 248s back about 3 weeks ago. If it breaks above that, that'll start another leg to the upside. And if it just takes that last week's low.
Do you go by 2 points, or do you need 3 points? That was another question along, because it all kind of goes together, I guess, right?
I need weeks. I want time. You could look. This is fascinating. If you look at my chart right here, this is the weekly chart. The diamonds, the Dow diamonds, basically the Dow itself. Have a look at this. It makes a green candle at the all-time high at 265.93 back in the, that was January the 26th. Then there's two red candles. Then there are two green candles. Then there's a red candle. Then there's a big green candle. Big red candle, second red candle, a green candle. Look how it's alternating. Red, green, red. And now there are a couple of red candles, but they're really holding quite nicely in the upper level. So you can see that there's no real trend, because a trend would say you've got at least three. This is a trend. If you're looking to the right on the monthly chart, that, all those green candles, that's a trend. So as long as I'm looking at this and I'm not looking at a trend, I thought I'd said it, I'm looking at it now, and I think I didn't say it. I said it in my write-up of the analysis of the Dow. This is just a trend, playing it for a bounce. And that's kind of what we've got. Now, what's really important about this is that without the news event at whatever time it was about an hour ago? No, it was less, half an hour ago, where the market suddenly started to pull back because the Dow was up 100, even at noon, I think it was up about 100 and something, and then it suddenly started to pull back sharply. So given that, the speed with which it's pulled back, I'm just saying, I don't think this is different, even though it's a very long term, and I know that you are willing to take a position knowing that there could be 5 or 7% pullback because we're looking at a 14 or an 18% rally. I don't see that right now. I think the risk is too great. So I'm saying to you, for your, let's call it, just for argument's sake, let's call it your IRA type portfolio. I wouldn't be playing games right now. I'd be waiting. I'd have patience. I think there's going to be, look at this Triple M. This Triple M should not be doing this. Triple M just disappeared off my screen. Triple M is up 53 cents after a smash to the downside. This is an ugly candle. UTX, United Technologies, this is ugly action. So you've got time.
Well, and then we got somewhat of a seasonality coming up for the more or less that favors the bears. I know seasonality can be a little bit misleading, but
into May, right.
Yeah.
Now I have a tough time with seasonality because sometimes you get the seasonality thing, but it actually starts at a slightly different time and it comes from lower down. So I try to use seasonality just to say that the tide should be favoring, and then whatever it is. But when you're in a sideways range, I think what you have to do is you have to be very specific and say, I'm looking at certain stocks within certain areas. I'm going to trade them. And if anything holds and really starts to move, for instance, when we got long the dollar, there was no way that I could be assured that the dollar was going to break above the candle of the week of the 2nd of March, the high of 90.93. Everything was improving, and then you got a pretty ugly middle of April where the price went down to 89.23, and then out of the blue you got those 4 very strong green stocks to the left side, high of 90.93. It soars intraday, and then boom, it goes up again towards the 200-period moving average. So that's what I'm saying to you, that within the sectors, as soon as I start to see speed that accomplishes something that it hasn't done before, that's why I'm saying it needs to hold in the weekly chart, whatever we're looking at least 2 weeks on the upside of the breakout or 2 weeks on the downside. I think you've got
Basil,
time.
thank you very much.
Thank you, Ben. Good question. Thank you very much for calling. We'll be back, folks. A lot of questions came in. Basil 22. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So I had a couple of questions. I had a question about IYR. IYR is the REITs, US REITs ETF. And the answer was, I like its action. It's at the upper end of the range. It's like the dollar was before it broke out. I haven't yet. I was going to say mystery, but I don't think it's a mystery. Why I'd want to be involved in a real estate action right now when the HGX, the Philadelphia Housing Sector Index, has pulled back so sharply. But I am thinking that this has to do with rates and yields and what you can get, money for $1 in, what can you get out. So I am looking at it. I'm not writing it off. I'm saying that this is on my watch list right now as something that might move stronger. It's testing the weekly 200-period moving average. Here comes the question. So ARNC, 3% of the XAR, aerospace, ARNC. Do I know ARNC? Wow, I thought I knew that sector. Arconic, I have no idea. It's down 16% at 18.66, down 3.78. Wow, that looks ugly. I don't know what it is. Arconic Inc., but it must be part of that sector. Then Aero Defense ETF. And Boeing, the question about Boeing, I always get a question about Boeing. Yeah, I think that's a peak effort. I think it's kind of stuck. Down 354 at 337. There's another reason why I think the Dow's going to have a little problem. It's got some stocks that have really been on a tear to the upside, and they need to consolidate. And I'm also watching Goldman Sachs. URA, question. URA is the uranium something. Yep, there it is. Global X uranium ETF. It went to a leg A, B, C. I believe that's a D. I believe that, yep, I think that is. Yep, a peak D with a doji candle. Pulls back sharply from the 14s, comes back to the 1290s. Now it's trading at 3043. The weekly chart, this is a very interesting weekly chart because at first glance it says, oh, it failed the left side low, and then you look closely and say, no, this is not bad action. It went under and then it closed over it, and now it's running above it, and it's gone past the left side peak of significance. And then you say, wait a minute, look at the monthly chart. Look at this test of a base. Talk about a base. No, talk about a base. Look at that. That base has gone on for a long time. And that low that was made back in January of 2016 at 11.31, it has not been pierced, but has been attacked and almost touched many times in a very cyclical way. It's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12. You can go to 12. And 1, 2, 3, 4, 5, 6. So it keeps making this arch formation, but it now has a pattern. It's like a head and shoulders, but but that base is absolutely important at the, what did I say it was, 11.31 area. Oh, now, you know, uranium, if it was going to move, I think it should have moved already. All right, all I can say is if you are long, then watch 12.95 as really important support. If it breaks that, that's not good. If you aren't long and you're interested in this, I'd give it another 2 days. If it doesn't take out the low of, it's a 1343. If it doesn't, it mustn't even hit 1331. If it hits that, 13, I'm going to say 1327. If it hits that level, I wouldn't be interested. But if it holds right here, and it actually sneaks a penny above today's high at any point, either today or tomorrow, above 1351, then I would say to you the weekly chart could start to improve. So it would be a speculation in uranium. If this is something you watch, then I would say holding here within about 20 cents. It's really just 10 cents. 10, 11, 12 cents, doesn't break below 12 cents today, it's up 17, doesn't give that back, and it has a nice action tomorrow and makes a new recovery. I would say fine, then nibble at it. You could you could even put a tight stop. It's $13, put a 2% stop in, 26 cents, and then if it moves up, I would try to maintain that stop, and I just watch it to see if I need to add another position or not. Let's talk about it again. A person who spoke about it, Code, tomorrow. Let's talk about it tomorrow again. You can even nibble right here at 1343, because I know your style is to get in, and you're prepared to give a little sacrifice because it's a small position, and then you'll add to it. Right here at 1343, but I definitely, regardless, I wouldn't have more than, if you're coming in right now, 25-cent stop. But what's fascinating about it is the way that the MACD has made a potential M formation, even though the stochastics dipped sharply, and at the same time the histogram is improved tremendously. If the histogram says it's going to cross positive this week, you've got yourself a nice little trade here. So yeah, thank you for pointing it out. I'm going to write it down, just something for me to watch. Not sure if subscribers really want to get into uranium. Okay, now let's get to the next question. So XAR. Okay, I'm going to go to the XAL, which is the aerospace, the airline index. Lousy action today, but the PPA, which is the aerospace and, there it is, and defense, another red candle. That means that this has to be considered to be one of those M formations, and it's a G/C, and most probably it's going to be a G, because I'm still convinced that Boeing is done for now, and it's going to take quite a bit of a breather, maybe 6 weeks or 2 months, maybe even more. That's my looking, but I'm really looking at this as a peak E in the weekly chart of the PPA trading at 56 down 18 cents. Hope I answered that question. I did Triple M, I did that. I didn't do Caterpillar. Let's see what Caterpillar's doing. It had come back quite nicely, and then it gave it up. Peak D. See, this is the reason why I don't want to be getting carried away. Now I see it. I thought when Ben asked me, I made a note of what we were doing, but I forgot to put it in my newsletter, Traders Corner. This was really just yeah, treating it as a trade. I did say that in my paragraph. I said just treating it as a trade, the diamonds. And in fact, I'm pretty sure we're out of it for less than a 1% loss. It was a trade, and I was expecting the diamonds to rally into tomorrow or maybe Wednesday. I didn't expect any bad news like this, and yet the bad news is pulling the market back, but it's not crashing it down at this particular point. Next question I had was ODFL and JBHT. I've got JBHT. I can check the other one. JBHT was JB Hunt. This is transportation. This is, I believe, trucking. It's kind of stuck now. It had a really nice move. It broke above resistance, came right back in, and now it's testing the 9-period moving average. But what I said is it's the weekly chart that is my benchmark. Those two parallel lines, if you learn how to draw parallel lines, this to me would be green. This would be the Chapman wave inside track right here. If you're able to change color quickly, I like to use colors. There it is. Got it last week. It went above, stopped at the resistance line. Now it's under the Chapman Wave inside track repellent zone, and I'd be watching it. 117 is key support, trading at 118.27. So that's giving back some of the gains. We'll get back. We'll talk about ST, Verizon, W. Yeah, we'll be back. Got a bunch of questions. We'll be right back. The Dow is up 3, and the S&P is down 9. We'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. Just real quickly, I didn't get a chance to do that. There were some other questions I'm going to get to. Look, yields are down 24 cents, 24 ticks again in the weekly chart. I'm beginning to think this could be a peak C1, C2. So what the Fed does on Wednesday is going to be really important, because there's a chance that yields could just go sideways in a trading range for a little while after a huge move to the upside. So anyway, we'll talk about that more tomorrow. I mentioned something in the den about packaging. I grabbed PKG, which is Packaging Core of America, made a peak D in the monthly chart. Ooh, this is something to watch now very closely. I'm going to go to, so we did Bob, so Sarah did that. So Sprint is down at down $1 at 5.50. Made a peak D. Remember that gap Friday? Did I not talk about that? Oh, it was on my list, yeah, on Friday. Remember, gap ups to a D on a Friday, never a good thing. I just don't know what it is, but and it was a gap up, and now it's made an island reversal to the downside. Big takeover talk there. They're going to amalgam. That's So that's with T-Mobile. So telephone, let's just have a look. Telephone is trading. Gaps down, it's already down. You see, this is the thing here. Even the sectors, it's getting difficult. Big move up, peak E in the Verizon. I think we'll talk a little bit more about this tomorrow because the competition is going to get really, from things that I've heard, I think there's going to be a lot of competition for cable, for cell reception. I did the XLE, we do that again. OIH, that's what we wanted. So the XLE is holding okay. It's at a peak D. I just think it's a high-level consolidation. I don't think it's breaking down. That's the energy sector, Spider Fund, and I think at 73.94, I'd be surprised if in 2 days' time it closes under 72. I think it's just stuck in a bit of a range right here. I'm not sure if it's going to break out either, just at this particular moment. So Dow's now down 36, S&P's down 12. Whatever the news was, it's scaring the market. And just, this is a market to be very careful, very selective, very careful. Any moves you make to the upside, on the long side, make them small. And if it works out, that's great. Just don't get carried away. We want to conserve cash. And Ben, you'll know when I give a big buy on the diamonds because it's going to have a 3-point stop, not a 5% stop.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.